Good afternoon, and we're gonna do a end of day review for today. And today is August the 3rd, 2023. It's a Tuesday. It's a second trading day of this week, and this week is the very first trading week of October. And you know, October is a very special month, right? And we showed before the stack on October, it's a 64.52%, right? 64.52% is will be up close, but let's see how this October play out, right? You see the last October in 2022 is up close, and October 2021 is also up close, but this October 20 is down close. So maybe it's down close here and then boom, it continues to go up, or it's going to continue to go down and seek, you know, sales liquidity from this year. So we have the gap right here. It fill out the gap right there. So let's see how it's gonna go from here. We have a swing high right here. Let's see if we retest this swing high. Right, so that's the idea. But anyway, let's look at, you know, let's look at the 5-minute chart. I want to show something real quick. This morning I just want to follow up the setup that we are identifying this morning after it formed, and it's a setup that we do have a record of this setup. So I just look at the log that we have. So basically this setup is stayed like this, and I pull out the document that we did. So here is the setup name. I think we name is London Low breaking down short setup. And here's our write-up for this setup. So the condition is the Monday, the first candle at 9, it's gonna be down close, and then when you go into the second trading day, right, which is Tuesday or Wednesday, right, you have a London low was taken out by the Asia low and prior day low, and it's a narrow range after London forms a big move at 10. So that's an idea. Let's see. Yeah, you see, wow, it's happened exactly. The London is narrow, right? Very narrow right there. I mean, look at that. It look narrow. The Asia is narrow. The London take out, yeah, London take out the Asia low, and then previous day low. It not take out previous low, so that's maybe that's a different. Identify order block from London section. Yeah, so buy circuit at 40. $40.45. It's not exactly right, but it gives you an idea. But do this so we can see much better the write-up for this. So, but the entry time is you know, is quite accurate, but this condition may not be exactly. So that's the beauty of trading radar. It have variation, the same pattern, but it have variation. You know, we cannot go exactly. Right here, I think the magnificent move is happened from 9, right? You see the manipulation move, I think, is from 25, 925 to 950. So that's the manipulation move right here. Because this one is set up the sell side already. Or, you know, cyclical trap or bicycle rate right there. And then boom, it's going down. And the entry time in this case is can be 50 or 45. In this case, it's going to be 50, and this case is 55. So we need to modify this condition right there. Enter on the retest. This is 5 minutes. But if you look at the 1 minute, this is the write up for 1 minute. So for the and bottom at 12:13, I mean at a 13 hour. Let's see if it's correct. See, this is bottom at yeah, this bottom 1 hour later, around 1 hour later. Yeah, so we need to handle another variation we set up for today. So the basic idea of this setup is that the Monday have to have a down close candle on the 9 hour. That condition is it met right there. Other condition can be variation, but the big idea is met right here, right? The very first candle on Monday, the 9 o'clock Monday, is down close, and we don't care about this condition. The better this one we upload, because it set up it rate the buy side and set up the sell side reward track in order to go down. So it's perfect right there. So that's the condition that make right there. However, the narrow line right here is maybe not met, right? Let's see on the five minutes right here. Yeah, you can say a little bit narrow, right? Yes, it makes that condition, right? But the thing we need to pay attention, the key point is that around 10, right, or that it failed to break, and also fell break above the London low, then we can go in and short them. So that's an idea. So this is the whole detail right there. We can rewrite it in a very general term so we don't get lost in the detail, right? So basically the idea is that we already named this is the London low breaking down short setup. So the general, condition So basically, this is a weekly profile setup. Give it an idea, right? So on the second trading day of the week, because sometimes the Monday is closed, so the second today can fall on Wednesday, right? So it's just to be specific right there, because sometimes, right, the markets close on Monday. In such case, the first trading day is Tuesday and second trading day is Wednesday. So basically we say that the second day of the trading week is not always Tuesday, okay? So it's just to keep that in mind, because that is precisely happen on September. This setup app we have is September 6, 2003. That's the first instant that we recall this setup that where it happened, right? Because September 6, on that week we have the September 4 we off because it's a Labor Day. September 4 Labor Day. So that's an idea right there. So we try to generate the condition so we don't have to get lost into the detail. The general condition is based up, right? The bullet, right? And yes, we don't want to go detail, but right here, the Monday or the first trading day, the first candle close. So both instant is correct. So basically we try to match them. Yeah, Monday close, right? Or Monday or right, first trading day, right? Day of week, okay? The first 2 days of the week or Monday, just it's down close. And today it is the same, like the instance took place on September right there. So we try to generate this condition. So far we have 2 instances happen, right? It's happened on September 6th, and now it happened again, which is on this one, October 3rd, 2023. So basically we collect all the data and then we generate, we want to find the pattern, the repeat pattern, and that's exactly what we try to do right here, right now. And in both instances, we also see that it likely happened on the first week trading week of the month. Let's generate that, and you see next instant it fall into this. So occasionally that's our observation right there. Wow, that's how we learn, right? We make an assumption or thesis, then we collect the data in order to prove or disprove our thesis right there. That's how we build our trading system, right? And that's how we build our confidence. We build our conviction from there because we saw that, we see that happen. That's the reason why a lot of people we have a hard time to trade other people's system, right? Because that other people's system, even though it works, but when you are the one who executes the system, you have to experience that in order to have conviction. That's an idea right there. The confidence and the conviction. Otherwise, if you execute the best system in the world, you still fail because it's not become part of you. That because you don't practice long enough so it become part of you right there. And what else we see? And we see that by 10 a.m. right? And we do this. The reason why we do this instead of this annotation, right? Because this annotation helps us to do the code better. Because if you look at the time right here, it's just a code. They don't have the dot right there, right? Let's say the time right here, you see all this number, right? Let's say at 9:50, you don't do that annotation because it is a code. The code can only take into a number. You don't put a string there that I don't understand. So that's the reason why we do this annotation, because we want to standardize this. So when we put into a program later on, if we automate our system, then we know that we use this kind of format instead of this one. This one is just for readable, make more readable. But when you put into a automate system, you don't do this. So that's the reason we annotation the time like that. By this time, if the price failed to break the London, or that's called overnight DR, right? That's the DR model language, right? It failed break London, then go short. That's it. And how we're gonna go short? Different variation, right? Because let's say last time the instant it gives you identify the bearish order block, right? Let's look how it happened last time. So we know that. But in this, okay, so in here last time it happened. It is the 1 minute time frame on September 6th. The instant right here is that we identify a order block and fair value gap retest. This is order block. It's very clear right there. And then you see the fair value gap right here, right? And you can see right here is the market structure shift right there. Market structure shift. Boom, it go back. It take this buy side, but it cannot take this buy side, and then boom, go down and it retest again this order block. So you can enter right here on this order block, and entry time is 50, in this case 53 or 57, over here. Yeah, 53 or 1, 2, 3, 4, 5. Over here, 57 right here, 53, 57 right there. So that's the last instant when it happened. And let's see. We did define the target right here is a 3 standard deviation. But let's look at, I want to see at a 5-minute time frame. Here's our look lines time, 5 minutes time frame right here. 5-minute time frame, you also have a, I think I remember right here is a mixed spell right here. It's supposed to be bearish breaker, okay, bearish breaker and favorable gap and a retest right here. Or you can look this an auto block right here and flag retest. Yep. And entry time is 50, right? Yeah, 50 or 55 around this area. And we identify this is a manipulation move and a twist and deviation. That's our entry right there. Okay, let's see how it happened. Okay, so it's the low time frame, $4 move on the 4-hour time frame, right? It's a 4-hour time frame. So it bottom about this at 30, but today it bottom at 14 something. It's the general rule right here, right? But we see the difference on the instant of here. It bottom one hour later, 14 something. Okay, we change general, okay? And now let's see here. Here is today instant. So the manipulation right here is this move. I want to see how it moves for today. I want how many standard deviation it make. Okay. Let's say it's around, right here is 1, right? Right here you want to have 1 standard deviation. Basically it moves 2 standard deviation from this engineer move. So for the targets, there's about 2 standard deviation of the engineer move. Okay, that's the instant for today's instant, right? That how it happened. And you see the entry time for this time, it's just around there, but the pattern is different, right? The pattern for today is we can apply this pattern. If we see yeah, so this is the London low right here, and you can treat this as a you know what, if you treat this as a bearish breaker right there, because it's a swing low, right? The bearish breaker right here. Right here, that is the bearish breaker. and it fall into that bearish breaker, but also we want to put a note right here. So it's a bearish breaker. And also we apply the turtle soup like scenario rate, which is the last move here, right? The last high of 20 candle in here, and you see that, and the candle right after it take out that high, you see right there, then mark that recent high right here, and as soon that you see it open below this candle, you see this candle open below this level right there, and it's confluent with this level right here, 420.41, which is the buy sell liquidity from the 4-hour time frame. All right, but right here, this level the high is 39. See that? It's 39 right there. As soon as it's open below with this candle below the 39, 426.39, then we go with our short right there. So that's the setup for today. The general idea is the same, right? Basically, it failed to broke our London low at 10, and the entry may be a little bit different, right? But the last time the entry is a order block, but this time is a breaker and also confluent with the turtle soup setup right there. Okay, so I want to do the right up right here. So basically we're gonna go in right here at 10. So this setup, right, is happened. We call London low breaking down, short setup, right? And this happened on second trading day. Okay, and you know, we already put a condition that the first 4-hour time frame candle has to be down close. We don't have to put a detail, but in here, because we already do the write up, but here we just keep it very short right there. And it confluent with the ICT, right? It's a bearish breaker, and you have a fair value gap and retest, right? And also we have the turtle soup, like, so all three of this is, you know, confluent right there, which is in this case is plus 20 candle high, right? Is the last 20 candle right here. So how do we entry? Entry time is at entry time is 10. All right, we need to put a little bit right up here. or the logic entry that yeah, let's do this. Okay, at 4:26:39 when the candle at 10, okay, open below this level. This by this we mean for 26:39 right there. Let me make it more clear, right? 26:39. So basically we put a sell order below this 439 right there. So at 9:55 or 9:50 we go up there, we put the sell order, or yeah, the sell order. When it's break below that, we sell it, and we just put the stop loss, 5 cents above above this high, which is 420.69 right there. So our stop loss is gonna be 5 cents. Above 426.65. Okay. And our targets in this case a little bit different than the instant to happen in September 6th. I think in this case our target is this level right here. 420.87 is a X4 sell liquidity. Is that right? I believe so. Hold on, let me double check real quick. Is that? Yeah, I think so. X4, hold on, give me just a second. Want to wrap it up real quick. Okay, so hold on, let me copy this, and we're gonna redo this again. Okay, so now we see right there. I just fix that in the other monitors, and it reflect the trend right there. Okay, I want to make it very precise that we have to plan our trade better in the future when we see it forming. So it's a actually for sell side liquidity at 420.87. So that's the only setup that we are trade with for today, if we can identify that. Yes, so from now on we watch for this beautiful and setup right there. High properly, a lot confluent right there. So this is the London that we are talking about, London right here. Right, that's the London. And this is a manipulation right there, and the last 420 candle high right there, and as soon as we see this candle, open below the high of this candle, then we go in right there. We say right there. So the candle number 2 right here, that's the key level for to entry, right? Entry when a candle at 10 open below this level, right? Oh yeah. Let me say something. Okay, let's make a little bit more. What you want to call that? I mean, I kind of lost the verbiage right now. Candle number 2 high, which is 426.39. Oh, candle 2 high 426. I want to make it more detailed. Okay, right here we say 426.39, but what is 429? It is the high of this candle number 2 right there. So we just want to specify. Maybe now we know, but when we look back, when we look back at this setup, we're going to review them every time. Maybe 6 months from now, 3 months from now, a couple years from now, we forgot what is that. So we have to put as much detail as possible, so it helps us, later on. Okay, starts it this candle right here, very key level. That will be give us the signal to empty right there when it breaks down. Okay, I think that's all I want to say for this setup. It's a beautiful setup. I'm glad that we recall this and remember this. So like we say, repetition make perfect. Keep doing that long enough, then we will what? We will become right here. That's our end goal, ultimate goal, that we're gonna recognize, identify the setup when it's about to form. So right now we are between these two, 1 and 2 right there. Sometimes we see the setup after it already being formed, and sometimes we see the setup is being formed. So maybe 50%, right? That's what we are right now, right? 50%. So our next target is that we want to increase, we want to increase this, we want to recognize the setup when it being formed, we want to increase 6%. 80% of the time we can recognize when it will form. Then we can take a real time, right? That's how we measure our progress right there. So if we go up to 80%, then we're very good right there. Right now it's 50% right there. And then we go up to 80%, then we jump to the next, the very optimistic target is that we are gonna identify when it's about to form. Right now I think we maybe just 5% of the time. Right, let's say in 100 time we only recognize 5 times, so we still beginner, a baby in this process. So we still have a good journey to go, right? A long journey to go. Anyway, I think it's a very wonderful and helpful and productive review for today. Thank you for your time, and talk to you later. Bye for now.